Guys, so today let me show you how you can analyze any chart given to you. It's very simple, very simple. Now when you open any chart, the first thing you should do, you should go to what? To a higher time frame. For example, let's say I'm a day trader, right? If I'm day trading, then I should like mostly focus on maybe daily time frame. There's what we call a top-down analysis. So me, if my entry should be 1 hour, then I should start from what's my daily. But if my entry is from 4 hours, then definitely I should start analyzing from weekly. Why do we do that? We do that to get the bigger picture of what the market is doing. Because if you stay on the 4 or maybe smaller time frames, you not get the bigger picture, and you end up like losing trades. The reason is there are so many noise in the lower time frames, but when you move out to the bigger time frames, now okay, now this is a chart in my front. Obviously this is euro USD. As you can see now, the market is kind of ranging. You can see market is within this let's use another one, or maybe let me just use this one. Market is ranging. Why do I say it's ranging? You can see we have one touch here, one, two, three, four. It's a downtrend first, then it's turned to an uptrend, but then it's eventually ranging. Now the upper our resistance level now is here. Okay, you can see there are many touches. One, two, three, four. So it is ranging. If I am to trade this market now, this is higher time frame now. Now the higher time frame has shown me that what the market is in a ranging market, so it is not a trending market. Now I'll move on to my lower time frame. Let's say 4 hours. Now on a 4 hour now, you can see it's kind of it's still ranging actually, but like it's more of like it's very clear on the 4 hour time frame. It's very clear, like the structure here is very clear. But on a daily time frame, it is what it is ranging. So if I'm to trade this market, what I will do is I'll look for patterns around my key levels. This is my key level here. You can see this is a key level here. So I'll look at what the market is doing. And since the market is ranging, you should be buying low and selling high. You buy from the support and sell from the what? From the resistance. Now I'm buying from here. Now this is not my entry time frame. This is my analysis time frame. Then I'll move on to my entry time frame. Then my entry time frame is 1 hour. Then I'll look for chart patterns here. Then look for an opportunity to buy the market. I'll long from here. I'll aim for what? 1 to 2 or 1 to 3. Since the market is ranging, I will eventually allow the market to breathe. Give your market a space, like the stop loss you have space to avoid stopping you out prematurely. Now if you observe this market, it will go from here, from down here, up here, because it is a range market on a daily time frame. Now the first thing I said you should do is what? If you're analyzing top-down analysis, you should go to the higher time frame, then come down to the higher time frame, identify your trend, your key supports and your key levels, your support and resistance levels, then move on to the lower time frame to get your entries. Now here I'll look for the chart patterns, as I said. Then I'll look for ways to buy the market. Now if you're watching this video, look for opportunity to buy euro USD, but know your chart patterns. Know how to use your chart patterns. Don't use chart patterns alone. Use chart patterns with other confluences. So guys, that's on how to analyze any charts given to you.